Bert Farrell. I'm CEO of Zoosh Ventures, and I'm also one of the original co-founders of Zoosh Group. My role is primarily finding startups, working with them, and the team at Zoosh. And that's my job. I also do a part-time CFO role as well, but that's very much interim. Venture building is an evolving term. It's not as obviously recognized as venture capital, but it's very much a growing market segment. And from a Zoosh Group perspective, there's three types of venture building, or three elements to the venture building that we do. The first one is where we work with high potential founders. So these are typically non-technical commercial founders who have a lot of experience in their industry and have spotted an opportunity where they want to create a venture. So that's where Zoosh come in, and we help them both on the technical but also on the commercialization side. So that's one aspect of venture building. Another aspect is what's called corporate venture building. And in that case, we work with larger organizations who are essentially the founder, and we work with them on creating a new spin-out company. And then the third aspect, which is something quite new in Zoosh, is where we actually do our own ideation. We create our own businesses from that. That's more a traditional startup studio model. So sometimes the words venture building, startup studio, they're used interchangeably. Zoosh as an entity was founded back in 2014, and we hadn't really split it into ventures, digital products. It was very much about how can we help founders build companies. So in essence, Zoosh Ventures was the original thesis behind what we wanted to do. But it has evolved since then, and as the company has grown, Ventures has very much focused on finding, as I call them, these high potential founders, working with them, seeing if we can create the company with them. And that's the basis behind Ventures. In the 7-8 years that we've been working, we have 12 ventures in our portfolio, and all of those companies we've started with at the very infancy, at the idea stage. And some of those have grown and are growing, into Series A type companies. Others are starting off. So we are in some ways a factory for creating founder-led ventures. I think there's a lot of things different about Zoosh than other companies, and I guess every company says that, but there is, because when you look at a typical product company in the technology world, it's a very defined roadmap. You create a product, you sell it, there's different marketing techniques, but it's almost a standardized business model. In the case of Zoosh, we have three different arms to our stool. So in one way, we're a product studio. And what that means is essentially we develop technology solutions, particularly cloud, or specifically cloud technology solutions for customers. Those customers could be startups, but they can also be corporate clients. So that's could be considered a more traditional service type business. We also then have our venture side of the business, where we invest in and work with, help founders commercialize. And that is a venture capital, but it's venture capital with an execution focus. So, and now we've actually moved into creating our own ideas, businesses. So it's a complicated, and it's taken us quite a while to really align the whole messaging around how the three different aspects of the company come together. And what all that is coming under is what I call this venture builder. So Zoosh Ventures is a component of the builder, where, as I say, the focus is on working with founders at the very start of their journey. Zip was has been part of our funding strategy, our funding journey, because for a startup to create a venture, you need money. You need money to build the technology, you need money to build a team, you need money to build your sales force. So the initial way we invested in our startups was what's called sweat equity. And essentially what sweat equity means is that you work for your equity rather than you give cash. You give investment. But as we kind of evolved, we understood we needed more sources of capital. So we needed more avenues, because it's a very capital intensive business. Even at an early stage, you need a lot of money for a startup to get from an idea to a commercially viable product and market. So that meant we had to look at external sources of funding. So we fund a certain amount of our venture building internally, but we also have what we call our ZIP. And our ZIP is, I guess the best way, Laura, of describing that is our ZIP is our angel network, a business angel network. And a business angel is an investor who invests in early stage technology or any kind of company, but specifically in our case, technology companies. So the first ZIP we did, we raised money from 10 angel investors. We put it into a pot, and we've invested in 10 companies, 10 startup companies at a very early stage. So what is offered to the investor is they've got a spread of companies for a relatively low, what's called ticket price. So they get to see these companies go from infancy through adolescence, through growth. So that's part of the beauty. And then what we find is some of these investors invest in the companies at later investment rounds. So the ZIP is really an entry point product that we have that allows angels, business angels, to join the club, but also to get a part of the equity at the early stage when the company is at its lowest valuation. So in other words, your returns can be much higher if they're successful, but they also get to see the companies as they move through the different phases of growth. And that in turn, that's the way we position that is it's very much the ultimate due diligence, because you're getting to see the product develop, you're getting to see the market developed, but you're also getting to see the entrepreneur develop. Can they execute? So that's the first ZIP, and we're looking now at a second ZIP and expanding that. Again, I go back to the term venture builder and not laboring the point too much, but the best benefit you can get from any builder is you start at the start. So if you're building a house, you don't start on the second floor. So in our model, we start right digging the hole for the foundation. And in the case of the ventures, our ideal starting point is at concept, when somebody has the idea. So we're really investing in the entrepreneur, or we're really investing in the idea in the case of our studio, because we are the entrepreneurs in that case. So the earlier the stage, the bigger the influence of Zoosh. Now, it's also the highest risk, because if you're investing at a start, the numbers are against you because the failure rates are higher. However, what we found is that we can actually de-risk that because of all our experience, all our skills, and all the talent we have in the company to help make sure that the companies have a better chance of success. So it's an early stage investment, it's higher risk, but it's also got a significantly higher return because you're in at the lowest valuation, as I say. You go on the journey, and as we do more and more of these, we get much more efficient at actually making these more capital efficient, but also in compressing the timelines. Yeah, I guess when I'm talking about portfolio companies, I talk about them as if they're all our babies. So I don't like mentioning one over the other, but no, they're you've different challenges or different excitement points at depending on the stage that the company is at. So some of our more mature companies that we have got involved in maybe 2014, 15, 16 are at a different stage. So they're they've customers, they're selling, they're hitting different challenges, but they're also seeing growth. So companies like TickServe, which would be one of our first companies, it's a digital ticketing distribution. It's a father and son founder team. It's been a really interesting journey watching them develop, figure out what the product needs to be. Initially started in the whole area of distributing tickets for music, particularly in the music sector, using digital technology or digital distribution, if I should say. And that's now evolved much more into the sporting world. So TickServe now would have, for those familiar with rugby, would have Twickenham and the Welsh Rugby the Welsh Rugby Stadium, and they're two of the biggest rugby stadiums in the British Isles, or in Europe actually, if you consider it. So it's great to see how the journey that was an idea that over many cups of coffee has now evolved, where 300,000 tickets went through the TickServe platform in November last year. And as live events become more and more, there's high volumes of tickets. So that's great to see that. We have other companies like Idaso at that point who are, have been established for 7 years, have 15, 16 people working. So it's great to see how each of these companies are creating jobs and opportunities for people. And then at the other end of the spectrum, we have some of our area who are building what's called the MVP. So that's the first product to let them get out of the trap. So a company like ClubSpot, a really enthusiastic young founder who is just a real go-getter, and now that he's kind of built his technology, he's out and he's moving into sales mode. So again, that's a different stage of the journey, and his job now is to grow that, and I've no doubt he will. So as I said, there's 12 companies in the portfolio. I won't go through them all, but as I say, each stage has different challenges, and the more we see, the more we can see how we can help. In the small way, we don't want to take too much credit for, because the founders are so important in this. Yeah, I suppose maybe before answering that, the VC venture capital is huge. It's a huge industry. You have everything from the Silicon Valley, large VCs that have been in operation for 30 years, and I'm specifically talking about VC and technology. So, when you think about Silicon Valley, you think about the Facebooks, you think about the Amazons, you think about the VCs in the business to consumer world. Then you look at maybe the VC industry in the markets we're in Europe. It's more fragmented. Their typical entry point is quite a bit later than when we're involved. So we are, we don't consider ourselves venture capitalists. We do fund companies, we do invest in companies, but as I say, we consider ourselves a segment of the venture capital market, which is the venture builder. And the venture builder goes in much earlier than the venture capitalist. So a venture capitalist, and again, these are in the markets that we're familiar with, would typically get involved in a company when they have a product, and when they're demonstrating traction, when they're demonstrating early customer traction. So it's really before that where the startup needs the capital. And again, a part of the Zoosh thesis is that you actually need more capital earlier, because if you're going to build it right. So you build the right product, you build the right product for the right customer. So that's what we call product market fit. So why do you do that 2 years, 3 years afterwards when the venture capitalists get involved, rather than trying to ensure that you have the capital? And this is really our vision, and this is really where we are going, and we've been demonstrating how we can go this way, is get a sufficient capital in at the start so that you compress the time from an idea to a commercial product. So instead of waiting 2-3 years, you compress that to 12-18 months so that a startup can actually be out in the market in a shorter time frame. So that's a challenge in VC that we believe we're addressing. So we can create better quality startups and ventures for VC. That would be, there's a lot of movement in this venture building world. We've just joined a global network called the Global Startup Studio Network, and that has something like I think there's an annual growth of 60, 70, 80% in studios. So it's a model, and venture builders. So it's a model that's getting more and more traction, particularly in the US, but also in Europe. And we believe that this is going to be a segment of venture capital that's going to be, there's higher returns, there's reduced lead time, reduced times to market. So it's a model that, if it's done right and if you've experienced in it, can actually create more valuable ventures in a shorter time frame. enjoy everything about working for Zoosh Ventures. I guess as you get older, and you know, as you move through your career, there's different motivating factors. So when you're younger and earlier, you want to travel, you want to, you know, as part of work, or you want to, you know, there's a career path or whatever. But I guess when you're at my stage of career, it's really about. I sometimes describe Zoosh as my version of Sudoku. So, you know, people, I mean, particularly people as they get older, they do Sudoku, or you know, to keep crosswords, to keep their mind active. I don't need that in Zoosh. I can talk to any of the ventures or the founders, or even, you know, with my colleagues in Zoosh, and there's always a challenge that needs to be solved. So I think as part of Zoosh, you know, as a group, but also as part of ventures, is that there's that constant fuel for the mind, you know, if that's makes sense. But I can. I think the words are visible behind me. Yeah, I think, I mean, entrepreneurship is a key word. It's you know, within my career in Zoosh, but even before that, I was always fascinated with people's. Why do people take a risk? And it's much more common now than it was maybe 15, 20 years ago, where it was a much higher risk. Whereas now entrepreneurship is job. You know, people, it's much more acceptable. And when you compare the risk profile maybe of the US versus Europe, you know, we're kind of catching up. So I'm a big advocate of everybody should be an entrepreneur. I know that's not realistic, but it's the best MBA you'll get. I say to my son, you know, is that, you know, if you can figure out how to make a company work or how to create something from scratch, there's no MBA that's going to teach you that. So entrepreneurship would be one word. I think passion, and passion is something you know, I'm actually obviously visiting Budapest for the first time in 2 years, and it's great to see, you know, everybody again. And it's, you know, Zoom can't get across the, you know, people's beliefs, people's passions, and all the rest. And that's something that hopefully I believe we have internally, but it's also something I hope and I believe we show when we're dealing with, whether they be customers or whether they be ventures or, you know, whatever. So the passion is the other side of it, and innovation will be a third word. And that, again, on a personal front, I love the idea. I'm a bad software engineer a failed software engineer who had to go into commercial and had to figure out how to, you know, I'm never going to be good enough to code, but I understand enough to be dangerous and to ask stupid questions. But what I love is the innovation and taking a challenge and looking at all the different possible solutions. So, you know, there's many words, but they'd be the three words that come to mind.